What's up guys, it's Andy here. Welcome back to the Andy Kandola Show. So in today's video, I'm going to go ahead and share with you guys an update as far as investing in this portfolio. We are in week 31. Here's the thing, I just added a brand new pie in my bucket list portfolio. And this one is going to be a bit of a surprise, but I'll tell you guys why I added this pie. Plus, I'll share with you guys the stocks that I'm investing in. There's going to be 3 new stocks that I just bought in my portfolio, and I actually sold out of 3 dividend stocks. So this video is pretty packed. Now, if you are new to this channel, I do focus on this bucket list portfolio. This is my main portfolio that I like to invest in. This portfolio is primarily focused on dividend growth stocks, but I'm gonna have a little bit of a shocker in this video, guys. So stay tuned for that. Now, here's the thing. The market as of right now, today is up. However, in the last week, the market has been kind of trading sideways. If we just look at the overall stock market at the beginning of last week, the market was up and then it started going ahead and trading sideways. So basically, if we look at the last 5 days, the market kind of has been trading sideways at this point. Good news is there's multiple different vaccines that are coming out. At this point, Pfizer has announced that they have a vaccine that's over 94% proof, as well as Oxford also announced that they have a vaccine that's 70% effective. So that's good news because multiple companies at this point are coming out with a vaccine. I am hoping that before the end of the year, the vaccine is out and people do start getting it, but let's see what happens. Now, my goal with this portfolio is to go ahead and dollar cost average every single week in the portfolio. And if we just look at the last day, guys, I am down $547 in the last day. The portfolio's current value is sitting at $78,162. In the last week, the portfolio is down $1,018 or 1.29%. In the last month, the portfolio is up $2,366 or 3.25%. In the last quarter, the portfolio is up $3,103 or about 4.76%. And then in the last 1 year, the portfolio is up $8,632 or 20.69%. And then all time, guys, because it's been less than 1 year since I started investing in this portfolio, it's sitting at the same value. But if we look at the earned dividends, I've earned just in this last 1 year $795 in dividends, and the market gains, I've had $7,837 in gains. Now let's go ahead and jump into the new pie, and I'm gonna go ahead and share with you guys basically the stocks that I actually sold out of as well. Now, I do have a couple trades. I have 3 trades, and these are basically gonna be the 3 new stocks that I added in this portfolio. But here's the thing, the new pie that I added in this portfolio is gonna be right here at the bottom, but it is the growth pie. Now, here is my input around growth stocks. I like to go ahead and invest in dividend-based stocks, but these 3 companies that I invested in within this portfolio, I just could not say no to because I'm such a believer and I use their products. So at the end of the day, I literally thought through this for the last month before I actually pulled the trigger and added a growth pie in my overall strategy, because all the other pies, if we look here, do pay me out dividends because they are divided into the 11 different sectors. But because I've seen such a huge potential and I don't want to miss out on basically these growth stocks, so I am going to go ahead and dollar cost average in every single one of these stocks. Now, this is a brand new pie I just added in the last week, and this is basically the stocks that I'm going to be investing in for the following week as well. Now, here we go. The 3 stocks that I added that I'm a huge believer in, and as well as I have their products, is going to be Tesla, Peloton, and Amazon. Now, guys, yes, I am on the Tesla wagon at this point, and if I invested 1 year ago, I would have gained right around 600% in Tesla. Now, I will say, guys, I do own a Tesla myself, and I'm a huge believer in the stock. I believe Tesla, as far as their innovation, they have a potential to go ahead and at least double in their stock price over the next year, just because of all the product lines, all the different cars that they have coming out, as well as they are basically the innovators when it comes down to the automotive industry, and they're disrupting the whole industry. Tesla does not promote. They actually don't have any commercials. It's just word of mouth. And owning a Tesla, I would probably never go back to another electric car in the next couple years because I just don't see anybody catching up to them. So as far as the stock, I'm a huge believer in Tesla, and that's why I went ahead and added this in my portfolio. I am going to go ahead and grow my position in the stock, and currently within the growth pie, this stock is going to be about 60% allocated within this pie. Now the next one is going to be Peloton. Now here's the thing, my wife loves Peloton, and honestly she got me into Peloton as well. Recently I just went to one of their classes, and this is a subscription model as well. Peloton's doing a great job as far as sucking people in. They have a retention rate of 93%. I love the stock. I believe the stock has an awesome ecosystem, and they're just going to grow over time, especially after this pandemic, which gave the stock a boost. I do see the stock growing over time. Now Peloton's currently trading at $110 per share. Just in the last 1 year, they're up 281%. And guys, now the final stock within the growth pie is going to be Amazon. Amazon basically is interrupting the way we go ahead and shop. At this point with Amazon Prime, they make it way too easy to go ahead and shop with Amazon. With their 1 day or 2 day deliveries with Prime, it's just amazing. And basically at this point, I use Amazon for about 90% of all my purchases. So I love the stock. I love where they're going. They actually recently just got into the healthcare industry, so they are going to go ahead and be able to ship out of their Amazon pharmacy as well. So this company, as soon as they jump into another sector, they literally are disrupting the whole sector because they make it very easy, and they have literally figured out their logistics. So they're making everything simpler, more convenient, and much easier for the customer. So I really do like Amazon. I like where they're going. I see their growth potential over the next couple of years. They have been trading sideways since about July, but if we just invested in them in the last 1 year, we'd still be up 77%. So these are going to be the 3 new stocks that I just invested in. Now if we just look at my current trades for today, my current 3 trades are going to be in these stocks. Basically I'm investing in Tesla, Amazon, and Peloton. Now I am going to go ahead and grow my growth pie to about 5% of my overall allocation within the bucket list portfolio. Now I know what you guys might be thinking is, hey, are you changing a strategy at this point to growth as opposed to dividend growth? And I'll tell you guys, I'm still going to stick with dividend growth, but I just want to go ahead and add these stocks because I'm a huge believer in these companies. And the basic rule on investing is invest in companies that you fully understand, invest in companies that you use their products, because you're going to follow those companies either way. And these are 3 of the companies that I just could not say no to. But now if we just look at the overall activity over the last week here, guys, in the last week I actually sold out of 3 stocks. I have been dollar cost averaging within my portfolio. So with M1 Finance, once you go ahead and dollar cost average, it'll just go ahead and allocate a certain dollar amount towards the stocks that you have chosen to target allocations for. But here we go. The first stock that I sold out of, unfortunately, is McDonald's. Now here's the thing, I had to think through McDonald's very hard, just because McDonald's is a company that I do like overall because they've consistently been paying out their dividends and they're considered a dividend aristocrat. But as I see new competition come in the market, and really what triggered it for me is I'm seeing Chick-fil-A go ahead and compete directly with McDonald's. Just over the last couple weeks, I've been to 2 different Chick-fil-A's, and there's a McDonald's right across the street or right next to a Chick-fil-A. And the lines that I'm seeing at Chick-fil-A and comparing that to McDonald's, I mean, I've seen about 2 cars in the drive-thru at McDonald's, where Chick-fil-A has a line out the parking lot. So I'm really just not sold in McDonald's overall strategy over the next 10 to 15 years, because I believe that there's going to be new companies and basically new competition coming into the market that's going to take a huge pie out of McDonald's. Now, not to say that McDonald's won't survive, because hey, they're not just a fast food chain, they're also in the real estate game, and they're basically one of the biggest players in real estate. But just overall, I'm just not a customer of McDonald's, so I had to sell out of the stock. And basically what I did is, within the same sector, I went ahead and took that $655 and reinvested it in Target, Starbucks, and Nike. So those are the 3 stocks within the same sector that I just took that money and allocated it towards those companies. So this is going to be the first stock that I actually sold out of. Now the next stock that I sold out of is going to be Digital Realty Trust. Now, Digital Realty Trust is a REIT. Basically, they're considered a real estate investment trust, and they are the largest data center company out there. But this is another space that I see more and more competition coming in. And with Digital Realty Trust, just in the last 1 year, even after the pandemic, this company has really just been trading sideways, and I haven't really made any profits in this company, while other companies within the same space are growing. So I did go ahead and sell out of Digital Realty Trust, and these are the companies that I went ahead and allocated the funds in, which is Microsoft, Comcast, Avi, Lynn, Apple, Waste Management, APD or Air Products and Chemicals, Target, Store Capital, Prologis, CCI, and Nike. But majority of the money did go towards Store Capital because I did go ahead and allocate more towards Store Capital, and I changed the allocation within my real estate sector to have Store Capital be one of my core holdings. And guys, the final stock that I actually got rid of, which was in the last week here, is Main Street Capital, and this was basically within the financial sector. Now here's the thing with Main Street Capital, this was another core holding that I had within my portfolio, but I am really trying to go ahead and focus more on quality as opposed to a higher dividend. And Main Street Capital was just at that fine line where I just don't see the overall quality in the stock growing long term. However, they had a really good dividend, and that's why I stuck with them. They're basically a small investment bank where they go ahead and either lend out money or they go ahead and invest in different companies. But when I go ahead and look at my other holdings within the financial sector, this was basically my smallest holding, and I just don't see myself investing in this and seeing it grow over the next 10 to 20 years, where I'd rather take the risk with some of the large companies. So I went ahead and took that same dollar amount, the $1,412 that I sold out of Main Street Capital, and I reallocated it within the financial sector. So with that money, I went ahead and purchased JP Morgan Chase, TD Bank, T. Rowe Price, Moody's Corporation, and I believe, there's one other actually, American Express. So those are the companies that I went ahead and actually allocated those funds, and then I added some additional cash and I bought into Nvidia, I bought into Microsoft, APD, and Apple. But guys, these are basically the stocks that I actually sold out of. At this point, if we go ahead and look at my holdings, I have 47 holdings currently, and these are going to be the top holdings that I have within my portfolio. And as I said, Store Capital is slowly becoming one of my core holdings because I really do like this REIT, and this is a company that Warren Buffett actually has been investing in and dollar cost averaging every single month. And this is a company I truly believe in their management structure, and this is a business model that I like and I understand. But that's basically going to be an update, guys, as far as week 31 of my portfolio and the new pie that I just added in my bucket list portfolio. But that's gonna do it for this video. If you guys are new to the channel, don't forget to subscribe to the channel down below. I am fully transparent about sharing with you guys my journey on this portfolio. My goal is to go ahead and get this portfolio to $1 million, but my short-term goal is to go ahead and get this over to $100,000, which I was hoping to do before the end of the year, but at this point it will probably be sometime next year. I like to go ahead and dollar cost average in this portfolio, and I do try to go ahead and keep under 50 stocks in this portfolio that I have separated into all the different sectors within the stock market. But thank you guys again for watching. If you like this video, don't forget to smash that like button, and if you're new to this channel, don't forget to subscribe down below. If you are interested in trading with M1 Finance, I do have an affiliate link, guys, down in the description below, where you do get $10, and it does help me out and help the channel out, as well as I do have a couple free stocks that you can check out with Webull or Robinhood. But thanks again. I'll see you guys at the next one.